Welcome, ladies and gentlemen, Commodity TV out of our studios in Munich, and it's my honor and pleasure for the interview time here today to have Maurice Mason with me, the head of IR and corporate development of Caledonia Mining. Maurice, welcome in Munich.
Thank you, Jochen. It's good to be here.
Great to have you here, and you choose the right time, Oktoberfest, so Munich is full of cool people, and it's really nice here, and the sun is shining today. That's great. Sun is shining also on your company, honestly. I interviewed Mark Learmonth, your CFO, in April in Zurich, and maybe you can elaborate a little bit what happened since April with the company.
Yes, things are continuing to progress pretty much as expected. You know, we're in the middle of a fairly significant capital project, which is transformational for the company. That's the sinking of the new central shaft, which is going to set the mine up for many, many years to come. We're about 2/3 of the way through that project now. The shaft is currently at a depth of about 870 meters. And
how much do you want to go down?
It'll go down to 1,000 meters eventually. So 1,000 meters is the full target. We're investigating whether we might go deeper there at some point, but at the moment we're looking at 1,000 meters. And it's progressing well. The project is fully funded from our own cash flows.
How much money have you spent so far?
About $50 million. It's a very significant project.
And how much will it be in total?
Total $70 million over about a 5-year period, started back in 2014. So one of the largest mining investments in Zimbabwe, and certainly a high-profile project for us and for the country. So that's progressing well. Yeah. We've had some disappointments on the production side, but nothing material and nothing that.
Well, I mean, it's mining. That could happen.
It is, you know, it is. Mining's a bit like farming, you know, so things happen that are a bit unexpected. Yeah. We're targeting now somewhere between 52 and 57,000 ounces. I think we'll probably get close to 55,000 ounces, which is a little lower than what we originally thought at the beginning of the year, but still sufficient for us to make adequate profits, enough cash flow to cover the capital investment requirement, and enough cash flow to support our dividend very comfortably. So the mine is continuing to perform well, and we're not concerned that the production issues we've had are long-term at all. They will be completely alleviated by the central shaft when it is in production late next year.
Yeah, but you know, I think this also speaks for the company and the management, because you had an issue, but you solved it.
Yes, and
that's important.
Absolutely, absolutely. It is, you know, a lot of the surprises you find in mining are sometimes difficult surprises and things you have to deal with. So it's not often that the things go much better than you thought.
Exactly. Also, I think you have a little bit revised your production, as you said, to 55,000. But I think what is even more important to me when I look at the company, are you making money?
Absolutely.
And the point is, what are the all-in sustaining costs? What are you projecting for this year?
So we're targeting this year between $810 and $850 an ounce.
Voila.
So
it doesn't matter if you produce, let's say, 10% less. It doesn't matter.
No. At these gold prices, that's $500 an ounce, roughly operating margin. So we're very comfortable with that, and certainly the mine generates a lot of cash. You know, last year this mine producing 50,000 ounces, generated $23 million after tax.
That's a lot of money.
The dividend was $3 million, and the rest was invested. But once that investment is complete, we'll be in a very different position and able to support that dividend quite strongly.
Yeah, that's exactly what I wanted to ask you. I mean, on the one hand, you paid all investments by yourself, so there's no bank involved, there's no debt involved. No. On the other hand, you pay to shareholders, you reward shareholders with a dividend, and I think you are domiciled in Jersey, so that means no withholding tax.
No withholding tax. So we re-domiciled the company from Canada to Jersey, and that has a significant benefit for any non-Canadian shareholder, where there's 15% withholding tax in Canada, which is no longer applies. So that's quite significant to almost all of our investors, and I think the share price responded accordingly.
Absolutely.
Last year when that happened.
Next question, according to the future now of the company and the mine, of course. I mean, you are doing exploration. Yeah. Yes. When will we see the next NI 43-101?
We're hoping probably around about October, November to put out a resource update. The mine is it's a great ore body, but it's a vertical ore body and goes deeper into the ground. So drilling from surface is a little tricky, and you've got to make sure that you're drilling from the appropriate levels underground. You know, we don't feel resource constrained as a business. We've got 1.3 million ounces of gold. And we've consistently grown that since 2011. Every year the resource base has grown.
And you've replaced what you mined.
Yes, absolutely. We've produced and we've replaced depleted ounces, and we've grown the resource base, and we expect that trend to continue. So we hope in the resource update October, November time to have similar positive news.
So that means, I think until now you have in the mine plan, you have like 2026 for the resources. but that's, let's say, the next 9 to 10 years. But after the new 43-101, we can expect that to be prolonged, of course, right?
We would expect to be here a lot longer than 2026. So in terms of 43-101 reporting, there are requirements as to what you can include in your mine plan. But we often remind investors the mine's 100 years old, and it's never had a 100-year mine life. So that's an important thing to consider. There is always a rolling future that we would expect to see extending over time. It's part of the resource replacement.
Okay, great. So as I understand from your presentation, 2018 will be like the last year of large investments.
That's correct.
And from 2019 on, it will shrink dramatically. 2020 on 2021, I think you are planning then like $5 million as a maintenance investment. So can we expect then maybe higher dividends, higher payouts?
Yes, we can. It's a short
assuming
answer.
$1,250 gold.
Assuming $1,250 gold, the long-term sustaining capital for the mine is $5 million. That's to keep the mine in good shape and operating, keeping the tunnels open and making sure we invest sufficiently to maintain the asset. And so if the mine generated last year $23 million. We invested 20. When that capital investment drops to 5, we'll be in a position to grow the dividend very substantially.
Perfect.
And that's the plan.
Perfect. Last question before we can finish that interview. What questions we get very often from our viewers is, but Zimbabwe, has anything changed in the country? I mean, it is not easy. Africa is not easy to mine. That's the first thing. But Zimbabwe has a history which, was maybe not so favorable, to call it a little bit in a nice way. But the thing is, has anything changed on your good relations you have? I mean, you have fantastic relations with through your ownership. You're fully indigenized. You're playing full to the rules. Any problems occurred or something?
No, we haven't experienced any challenges in the country. Good. We find it a fine place to operate a mine. The relationship we have in terms of our local ownership with local Zimbabwean partners works very, very well for us, and it's a fine place to operate.
Perfect. But that was a great final sentence. Maurice, thank you very much. We look forward to the dividends, of course, and to some updates, and especially to the 43-101, because I hope it will show a much longer mine life then.
So do we.
Great, thank you very much.
Thank you.
Yeah, ladies and gentlemen, that was Maurice Mason, the head of IR and corporate development of Caledonia Mining. And you heard it, the 43-101 will come this year definitely, so that I'm pretty sure that will be prolong the mine life quite a lot. That's the one thing. Nothing has changed in Zimbabwe. All is in good standing. All is fine so far. And the company is producing profits and positive cash flows, and it's self-financed, no debt on the balance sheet, and it's paying a nice dividend of approximately 4.3% per annum, and it's in quarterly installments, and you have no withholding tax on it. So I think it's worth to have a look at the company. Thanks for watching us. Bye-bye from Munich.